Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about AMCI. Now, this is going to be a full-on DD due diligence technical analysis. You'll find each segment mentioned in the description below in the comments. You can move on to whichever segment you want to go to. If you have any recommendations, please leave them down in the comments below or in our Discord channel or server that is completely free. You'll find a link to that in the description as well. Make sure to drop a like to this video to help the channel grow, subscribe, and leave education on. Let's jump right into it. So AMCI acquisition, they are set to acquire Advent Technologies in a reverse merger kind of style. Now, basically the enterprise value is going to be somewhere between 500 million and $1 billion. At least that is what AMCI themselves are targeting. Advent, this is their website. They are basically, you want to think about them as a fuel cell or renewable fuel to electricity technologies. They make high PEM fuel cells that convert hydrogen, other renewable fuels to electricity. So they work mainly with renewable fuels, next generation of energy, and ESG first, with hydrogen at 1% of delivery in cost. Their vision is for a safer and cleaner world, with 15 years of research to get to the core chemistry breakdown final products, with over 50 international patents and unique intellectual property. Four main categories are automotive, aviation, power generation, and maritime. Some of the selected customers that we probably have heard before includes Fuel Cell Energy, which trades under the ticker of FCEL. I've done a previous video on that if you'd like that one. So quickly on through their products, this is their HT-PEM fuel cell technologies for the off-grid automotive and aviation markets, any fuel, anywhere. So quickly right off the bat, and come here quickly just to help you see this better. Their HT-PEM fuel cell technology really does remind you of something where ambitious technologies, including Nikola, etc., had in mind. And so this one here really works in four different parts. Advent HT-PEM MEA operates at high temperatures of up to 200 degrees Celsius, works with renewable fuels, natural gas, methanol, DME, biofuels, and hydrogen. And Advent MEA membrane and electrode assembly is the heart of the fuel cell. Third one is the Advent HT-PEM Advent fuel cell, and then the complete system as number 4. Now, the Advent fuel cells have life stations. These are 1 to 3 kilowatt solutions, stationary power, telco towers, combined heat and power markets. The next thing is their Life Drive 15. This one is a 15 kilowatt solution engine added to the lithium ion based BEV, triples the range and cuts the battery weight in half. Drops refill time into minutes. It is a BEV but with half the battery and none of the BEV problems. Now the Life Drive 50, that's 50 kilowatt. Range extender that can be powered by natural gas or methanol. Makes the promise of heavy duty electric trucks a reality. Then you got the Life Fly 30, which basically is a little bit of a downgrade from the Drive 50 because it's a fly. It provides 30 kilowatts. Using a 30 kilowatt fuel cell, this air taxi of the future can carry 2 times the load and 3 times the distance of BEV prototypes and refills in minutes. And then you got your Life Fly 1, which is a 1 kilowatts engine drone that can fly for 12 hours versus 30 minutes for battery only model. So really significant improvement, at least just in the drones themselves. You can think about it, something like Amazon Prime Fly or drone deliveries can really use something like this in terms of their energy, 12 hours versus minutes. Similarly, the aviation of the future might as well benefit from such technologies. Now the next thing here is the HT-PEM MEAS. That is the membrane electrode assemblies, and which is the heart of the fuel cell. Due to high temperature operations, their MEA can work with impure hydrogen that can be reformed on board with methanol, natural gas, and other renewable solutions. So quickly on, their Advent operates at somewhere between 120 and 200 degrees Celsius with materials that withstand up to 200 degrees Celsius with good acid management, rugged membrane under different pressure. So we're going to move forward from there. The redox flow battery membrane. And so, quick thing, the advent for flow battery membranes are developed by various companies aiming to address this challenge. Vanadium-based flow batteries are the most popular, though other technologies like iron-based batteries are gaining momentum. They provide materials they can test and benchmark, and we have the mass production capability to meet your needs. Advent membranes or redox flow batteries are different than typical exchange membranes. Advantages include longer lifetime, reliability, and lower cost. So that is another amazing solution. Organic photovoltaics OPVs. We offer stable, state-of-the-art electron donor conjugated polymers for organic solar cells. And how it works is they provide excellent performance, high power conversion efficiencies, compatible fabrication and process by eco-friendly solvents. Now the next thing we're going to look at is some of their research and development partners. So around 2017 to 2020, they have all these amazing partners going down. None of them really spark massive interest for me. They're 2018 to 2021. They have a bunch of other as well partners, and the list goes on. So if you would like to see their research partners, previous research partners, folks they worked with, it's all in here on the page. Next thing is their markets for automotive. They solve major EV problems, including range and recharge time, HT and PM fuel cell range extended by Advent 15 kilowatt to 30 kilowatt, increase range, drop fuel time to minutes, and reduce lithium-ion battery need less than 50%. So a little bit of quick thing of how it works. This EV has a fuel tank, which is a clean fuel today with zero emissions for tomorrow, a simplified onboard fuel to hydrogen reformer, and that works as a range extender, a lithium-ion battery that significantly is smaller in size and provides complete flexibility and does not antagonize current EV roadmap, rather just accelerates it. And so really how it works is the fuel itself is half the weight with 3 times the range, with 2 times to 3 times smaller than the smaller lithium-ion batteries, and it's still an EV. So we covered that. The next thing is aviation, and that is where I talk about commercial deliveries and drones. That is massive. Now the big thing about this one is they have batteries that works somewhere between 50 to 30 watt fuel cells based on renewable fuels and hydrogen fuels available. And so it takes, let's say we're looking at the air taxi fuel cell engine. It take 3 trips with 4 passengers, and it needs 10 minutes to refuel, which basically comes down to once or twice a day. And true net zero emissions. The air taxi battery itself, it can hold 1 trip, not the fuel cell, just the battery, with 2 passengers with 3 hours wait to recharge before second trip. Emissions depend on the grid mix, and that is the comparison. You are really cutting charging time and extending the range. Off-grid and portable power generations. So they run longer, off-grid operations, silent operations, and lightweight compared to batteries. Some of the select customers, as I did mention, includes FCEL, which we really went on with the DD, including in other ones, CSA, CSIR, bunch of prominent customers here that spark some interest for other different fields. Now moving on towards their presentation. Their investment highlights is low-cost fuel flexible resilient fuel cell technology solving the need for expensive hydrogen infrastructure. Developing and manufacturing the critical components for high-growth new energy markets including transportation, off-grid, aviation, hydrogen economy. Basically, we already know this. Proven scalable business model that delivers consistent and recurring revenue with $100 million revenue per city per 1 gigawatt of demand. Platform technology provides critical performance benefits for a wide range of end market with a total estimate market size of more than 850 gigawatts by 2040. Which means 850 multiplied by 100 million, you get the number. Quite massive. Now, the next thing they're looking at in terms of partners, some of their partners include the U.S. Energy Efficiency and Renewable Energy, Office of Energy Efficiency and Renewable Energy, AU, ESA, NASA, the list goes on. And basically their main thing is not just hydrogen, but of course they're working on multiple different solutions for multi-fuel cells and hydrogen. So that is something quite interesting and it really puts it up there. We already covered this diagram. Now the next thing here is renewable, the basic solving hydrogen infrastructure problem. First off, renewable and low carbon fuels. That is around $50 billion in terms of global infrastructure cost. Hydrogen, total infrastructure cost would be around $15 billion. Battery is around $5,000 billion. Sorry, $1,000 billion, not $15 billion. And so what they do here is develop, manufacture, and sell. Includes high temperature PEM membranes, as I did mention before, membranes and electrode assembly, high temperature fuel cells, and entire complete systems. Now, the unique market position in fuel cell value chain, you get to see that Advent really goes on into the category of any fuel anywhere rather than just hydrogen station only. Their main things they're working on is membranes, MEA manufacturing assembly, and fuel cell technologies. Now, of course, there is a future for system manufacturing, but nonetheless, the percent of fuel cell cost cover is up to 30%. Now, seeing Toyota here, they did actually announced that they were working with Toyota as well, not a long time ago, and Toyota literally just announced a fleet of newer green energy vehicles that there is a lot of speculations that Advent Technology has partnership with that. So some of the market's shares or market capability targets they're looking for. For EV and automotive, it's 1.2 trillion by 2027 for the MEA membrane electrode assembly. For fuel cell, around $350 billion by 2040. Aerospace and defense, around $27 billion by 2030. Energy storage is around $4.5 billion by 2028 and $2.3 billion by 2028 for hydrogen products, and IoT sensors is $1.3 billion by 2027. So the massive step in this level is mass adoption. Beyond production ramp up and commercialization of the product is their current next target. Is there anything interesting here that we have? Of course, we did already cover the market opportunity, be around $100 million per gigawatt. Moving on, their next generation fuel cell. So with their next generation fuel cell, currently the actual infrastructure goes on with battery EV, battery plus fuel cell hybrid, and fuel cell. So the fuel cell technologies really targets even more energy demanding vehicles such as planes, transits, boats, ships, etc. Now, moving on here, in terms of fuel cell, current level works as it increases the range of application with lower cost and smaller in size, and faster charging in time, as we did cover earlier. So nothing new there. Beyond fuel cell, what is their ambition? So, storage solutions for wind or solar energy. That is a $4.5 billion market by 2028. Green energy is essential for decarbonization, energy storage, and can be converted to renewable energy, and that is under the green hydrogen production. Electrolysis is around $2.3 billion by 2028. IoT sensors is around $1.3 billion by 2027. Currently, by 2021, you're looking down to what looks like to be around 20 million or 10-15 million. By 2025, they're looking to have around 250 million. So that is an insane amount of growth and definitely is worth an investment if these numbers hold. Now, their estimated 2021 is sitting somewhere around 13 million. Their 2025 estimated revenue seems to be somewhere around 254.8, with new sources including engineering fees, with new customers, and a massive expansion with existing customers and a bit of more on grants. So that kind of covers almost everything. The next thing we want to look at is in terms of their revenue. They estimate a massive increase of revenue year per year, and cost of goods remain to be somewhere around equivalent. They aim to be profitable somewhere around 2024. Now, in terms of the enterprise value, it's valued around $319 million. Now, that is interesting because we do have around an estimated value or total cost of what the reverse merger is going to be in terms of shares. So, conclusion here, they provide low-cost fuels, flexible and resilient fuel cell technologies at lower cost with higher range and lower size. Basically, that is the massive kind of conclusion that we can put a pin on it. I'll keep it on here around $319 million because we'll go back to this in a minute. Now, moving on. This is expected to take place before February 22nd, 2021. And so your voting will happen before then. The new ticker will happen before then. And that is basically, you can consider that to be somewhere around the merger date. Now, if we were to go on to the very first page, we get to see that their maximum proposed aggregate offering is around $261 million. Now, if you remember, the enterprise value is around $319 million. And so, when we go on towards the reverse merger, it is definitely going to be somewhat undervalued. But that's very much of speculations, and the price moves so much that we're not able to say that for granted. But at least for the time where they announced the reverse merger, yes, it was somewhat of undervalued. Now, that kind of covers everything that we need to cover. Now comes towards the technical analysis. So on a technical analysis point of view, on the 1 week perspective, we get to see that MACD is actually retracting, and that's a dangerous thing. Momentum is slipping, and willing percent R is dropping down significantly. Now, on the 80x level, what we get to see here is it is very likely to see a negative reversal at this level. The moving averages are indeed bullish on this level. However, if we look into the one day perspective, it is really testing the trading action zone. Between 1313 and 1189, that's the trading action zone. It is still currently bullish, but below 1189, things really start breaking apart, and that highly likely reversal is no longer there. Now, the 80x shows in a pullback here. Willing percent R says a massive pullback, momentum, a massive retraction, and MACD is on the verge of testing a negative reversal, which is very, very dangerous. On a 2-hour perspective, things look terrible because everything's starting to look bearish, and so we're not going to take a quick massive look into the 2-hour perspective rather than the 1 day perspective. That's more important for us. The moving average bands here is trading somewhere on the top 1323, in the middle 1202, and in the bottom 1082. Now, on the stochastic fast and the stochastic slow, what we get to see is they're both showing a potential for a pullback here, and that's as much as it's saying. The trend line that was formed here was broken, and so we can get to basically conclude that there is no trend that it's currently following. Now, on the Fibonacci retracements, what we get to see here, let's just pull it quickly. We get to see from the top to be 1465, the bottom 985. It has broken that Fibonacci retracement support at 1225, and that is currently sitting as a resistance. Below there, we have a support at 1168 and then 1098. Significant resistances are 1282 and 1362. Now, on the price line action, we get to see that the support's currently sitting at 1220. Below there, we're looking at $12 sharp, and then below there, we're looking down to 1154, and then it drops down to 1079. Significant resistances at this level are 1296, 1323, 1362, 1399, and 1414. Now, Ed, what do you think about this one? Definitely when you're looking into investing, this might be a solid investment. I myself, it doesn't really fulfill everything I need to know before investing, so that's why I don't usually invest in reverse mergers, at least until I see what the price over books and price over sales are and they're accurately reflected. Nonetheless, this one does show a lot of potential. With green energy, including with the Biden administration coming in, there is a lot of potential be happening here. And because there's a lot of potential, you will expect to see massive jumps and drops for trading, and I definitely think you can make a lot of money on this. Now, above the $12, I think you can go in for a quick trade. Below the $12, you need to wait for it to somewhat accumulate for a swing. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like. You have a wonderful day.